Carbon 6, you guys spent how many years building that company?
Like sub 4 years. So we started in 2021, sold at the beginning of 2025. So like our biggest business unit was going to become smaller.
Okay.
And so a lot of private equity firms that we thought were going to be the logical buyers for Carbon 6 started to fade away. And the offers that remained became pretty predatory.
Mm-hmm.
And so we weren't sure what we wanted to do. I don't necessarily love the day-to-day grind. Like some people love the operations and fix up and building the team. I like some aspects of that. Like I love the rah-rah elements of it. But when I look at myself deeply, I think I didn't want to become an investment banker early in my career. I didn't want to become a private equity guy. I thought that I wanted to be the kind of person who built businesses. But when I actually look at myself deep down, I think I really would have enjoyed those paths. I like the deal. And so I think as an angel, look, there may come a time in my life where I want to give back in a much more meaningful way, where I don't want to be the one driving and assembling deals. And at that point, maybe I just will be an angel, right? But I think at this point, I still have the drive to do the deal. And I think that when you're dealing with bigger companies, bigger transactions, there's a fun of chasing it, but there's also a fun of figuring it all out.
Yeah.
Trying to understand, what makes sense and, how to put things together. And so I said, look, I want to be an independent sponsor. My thought historically was that I would do this privately, but there seems to be this opportunity today, point in time opportunity to really establish something in the public markets. So let's go for it.
Why does a company go public?
For some, it's a liquidity event, right? For others, it's a signaling mechanism. My first SPAC, I raised, my team, we raised $172 million, 172.5. And our goal is to find a company that's far bigger than that in its value, merge with that company, bring capital to that company, and then help the company go public. Going through an exit is an exhilarating process, but also an incredibly stressful one, and one in which the things I know today are things I wish I knew at the beginning. One of my big learnings in this journey is just around how the public markets work versus the private markets. So as a startup founder, a startup operator, you're rewarded for setting big goals. And like, even if you're only 80% of the way there, the fact that you grew really fast, achieved a lot, drove revenue, drove earnings, like those are being rewarded because they look back on what you did. In the public markets, it's all about expectations management in addition to how well you do. So it's about setting goals, but setting goals you can achieve or over deliver against. And they talk about beat and raise, beat and raise, beat and raise. That needs to be the mindset when a company goes public. And so what a founder needs to be able to do is actually under-promise from the beginning and have a real clear idea of what that founder and what that team is going to be able to deliver, right? And that's the type of coaching that I've received over the past few months from my partners that I think is so crucial as you approach a public listing. And this is just one example of the type of thing that I think companies don't know when they start approaching the public markets that they probably should. The same way as like when we exited our business at Carbon 6, we just had no idea what the process would look like. We had no idea what private equity firms were going to think about our business. Because, as a founder, you're doing this once, twice, 3 times in your entire career, right? And I think reflecting on that, it made me just so convinced in the importance of getting the right people around you to help you with each inflection point in your journey. Hi, my name is Naseem Saloojee. I'm the founder of Suma Acquisition Corporation. We exist to help companies in the mid-market, $500 million to $2 billion plus in enterprise value, inject growth capital and go public on the NASDAQ. Today on the Start Well podcast, we're going to talk about SPACs, independent sponsor platforms, and the entrepreneurial journey.
We have so much to talk about, by the way.
It's a lot.
I don't think we've talked. Have we talked since Carbon 6 went through its acquisition?
We did that podcast with you probably was it right before the Carbon 6 exit?
I think so. I think it was right before. It's hard to tell.
Yeah.
So much happens.
It's been a while.
in our fast-paced entrepreneurial life. But that happened, right? So Carbon 6, you guys spent how many years building that company?
Like sub 4 years. So we started in 2021, sold at the beginning of 2025.
Man.
Yeah.
Man. Sold it. And then what happened to you?
I left with the deal.
So you were not part of the operation of
Not
the
part of the
company.
operation.
Okay.
I offered the CEO of the acquiring company. I said, look, would you like to have me around? And there was not really an interesting offer forthcoming, and so I was happy to leave and kind of figure out what I wanted to do next.
Nice.
Yeah.
And what was that process in your mind?
So the exit
Because you guys
process,
were like, and I have to ask this because for any entrepreneurs that are listening to this, that whole crazy cycle, and they can watch back the previous episodes talking about Carbon 6 and you guys building it, but like growing a sales team and like going hardcore at building this thing, trying not to like raising money, but then spending it because you have to, and then trying to make it sustainable and going a million miles a minute. It's a tough thing to take a breath from afterwards. So yeah, that's why I asked.
So it was a total grind. And like, we covered a lot of this with you, but like, so we raised money, we had the markets on our side early.
Yeah.
And then they were against us, and it was just a hustle and a grind. And like, we had like couple hundred shareholders who each threw in a very, very tiny amount. And we're like dialing for dollars to keep enough money in the business. We were grinding it out from the perspective of like building our sales team, like hustling, traveling from conference to conference to conference, like building up our brand. Like it was a hard road and a hard industry. And so I felt just first off, just grateful that we were getting to the exit that we were getting to.
Yep.
And a bit relieved, frankly. At the time that we were exiting Carbon 6, the market was working against us a bit.
Right.
In that Amazon was making some rule changes that were going to hurt our business in a big way.
On returns and stuff.
Yeah. So like our biggest business unit was going to become smaller.
Okay.
And so a lot of private equity firms that we thought were going to be the logical buyers for Carbon 6 started to fade away. And the offers that remained became pretty predatory.
Mm-hmm.
And so we weren't sure what we wanted to do. And we frankly got fairly lucky. We saw that SPS Commerce, who had acquired us, they had been in market. They'd acquired a Walmart solution, and we were in Amazon, and the Walmart solution was very, very complementary to what we were doing. In fact, we were about to be building a business unit and starting in the kind of early innings of building a business unit that was going to go head to head with that company.
Mm-hmm.
And so they saw it as an opportunity to kind of add Amazon to what they had with Walmart and take out a potential competitor. And so they were willing to pay us like a slight premium to the private equity offers out there, but with a full cash out.
Okay.
And for us, it was, the opportunity to, kind of move forward and like obviously at a lower valuation than we thought we were, but, with the full cash out and no obligation to stay, it was an opportunity to kind of move forward and say, look, we checked, we got to win. We got to win for ourselves. We got to win for our investors. We got to win for all of our team members. And everybody's been part of the deal. It wasn't the place, frankly, like we had bigger goals, I think, at the start of our process in terms of where our number was going to land. But, it was amongst Canadian exits, still one of the biggest exits of the year last year. And so
how much did the company sell for?
Canadian, 301 million.
Okay.
US 210.
Okay.
Yeah.
And where did that land you?
So I was planning on taking a year off.
Yeah.
My wife says I made it through a few days. I like to think I made it through a few months.
Yeah. It's all relative.
Yeah, like within the first couple of weeks, like a couple of buddies and I were setting up a real estate little thing. And then I got roped into looking at a Bitcoin treasury for a while. And I was looking at this deal after that deal. Before I knew it, I was looking at multiple deals.
Yeah.
Driving hard. And, I took a step back and said, like, is this really what I want to do? And I think what I realized was that, I wanted to take a bit of time off, and I did. I wanted to be around more with my family. I wanted to have more flexibility.
Yeah.
Our second child came last March.
Oh, so, congrats, man.
Thanks, man. Yeah. Had a bit of time there, and we planned some family holidays and all that stuff, but I wasn't ready, like mentally, to not be going. I still wanted to go. I just wanted to do it with full freedom, right?
Okay.
To kind of chart my own course and do it without necessarily the same amount of overhead. Like I think at this stage of my life, want to be running a big enterprise. So I want to keep it relatively small and be able to support founders, be able to support business owners, be able to give back a little bit while also creating. And so, yeah, that's kind of why I started to do the thing I'm doing.
So, I mean, there's so many options that you could have pursued in terms of like answering those values and that, you know, that mission. So as you started thinking about kind of how to apply yourself to supporting entrepreneurs and, you know, what were there potential different things that you could spend your time on leading up to this whole question of what you're doing now?
I looked at a couple businesses to acquire. I looked at digital asset treasuries. I looked at real estate. I still am looking to do real estate stuff. And I think where I netted out was the things I've loved about the last few things I've done were, you know, business development, M&A, just getting deals done, engaging with people. And when it came to buying businesses, I loved the buying part. I loved the BD part. I don't necessarily love the day-to-day grind. Like some people love the operations and fix up and building the team. I like some aspects of that. Like I love the rah elements of it. But when I look at myself deeply, I think I didn't want to become an investment banker early in my career. I didn't want to become a private equity guy. I thought that I wanted to be the kind of person who built businesses. But when I actually look at myself deep down, I think I really would have enjoyed those paths.
Yeah.
And, you know, I think being a deal guy would have been fun.
Or something?
Or maybe like, you know, Goldman Sachs early in my career, or maybe kind of shift over and like, you know, go work in a private equity shop for a while. I'm not sure. But I think that I probably would have enjoyed that type of work a lot more than I thought I would. And especially like the senior level stuff, right? Like the kind of chasing the deal and putting the deal together and all that kind of stuff. Like I enjoy that.
Fun. That's also an aspect of business that seems to have disappeared in the last half decade here in Canada, or a decade.
For sure.
Like when I was younger, I always thought that, at least that's the African perspective. Like even when I was a teenager doing business in Africa, it was very social, you know, like you meet someone that you could do a transaction with, and it's about the relationship. And that's the fun stuff. It's like, what are we going to do? Well, what we do doesn't matter. We'll get the people to do the thing. You want to do that deal with the person, spend time, see the fruition of that outcome, and celebrate it, and then socialize with other people and do more deals like that.
Exactly right.
But that aspect of like trading as business is seems to be culturally lost in Canada. It's very difficult, or it happens at a certain level. If you don't own, you know, like a diamond mine, you're not gonna, you know, be like having those nice steak lunches to like, you know, negotiate the transaction.
Well, for you or for me, the trading is probably in our blood, right? Like your family went to East Africa, my family went to South Africa, and they went to establish trading routes, right? So I do wonder how much of that is just, you know,
generational and like inherited. I think so. I mean, I think, yeah, our families, definitely my family goes back to how many generations now? Like 6, 7 generation, you know, multi-continental immigrants, right? And you had to make something wherever you went. You had to make your living. Yeah. So the hustler culture is like built in. Yeah, I like that though. I just think that it's this thing that's like an aspect of business that feels a bit lost, because also maybe that there's, you know, my lens has been for the last couple decades very much leave aside all this real estate stuff, which still our customer base is a lot of software companies and others, but yeah, before Startwell, I was in software, and software itself is weird because if it's venture-backed software, people aren't necessarily building companies. They're really focused on the product, and they're really focused on convincing people that product's going to change the world to get investment. And that's fun, but how personable is it to own that product when you know that it's got to like scale to pass on to whoever buys it?
Yeah, that's fair.
Okay, so now you're thinking about all this stuff and you settled on a model. The way to apply yourself to the world.
The way to apply myself is that I wanted to be an independent sponsor. So I wanted to invest in or buy businesses.
Okay.
And spend my life doing that. Spend my next chapter doing that.
But why not just as an angel? Assumedly, you have money in your britches coming out of that acquisition.
Yeah. I like the deal. And so I think as an angel, and look, there may come a time in my life where I want to give back in a much more meaningful way, and where I don't want to be the one driving and assembling deals. And at that point, maybe I just will be an angel. Right? But I think at this point, I still have the drive to do the deal. And I think that when you're dealing with bigger companies, bigger transactions, there's a fun of chasing it, but there's also a fun of figuring it all out.
Yeah.
And trying to understand, what makes sense and, how to put things together. And so I liked the idea of being a private independent sponsor. And I thought that that's what I was going to do. I actually looked at a couple of companies to buy. But I started chatting, I was looking at how to take a company public on the NASDAQ. I'd never really understood the difference.
It's one of these sacred knowledge things of finance, right? Like average lay people or entrepreneurs don't know about finance. We're scared of it,
It's funny. Like I'd never thought about it. And there are actually multiple ways to do this, right? And so I started learning these different paths. And, I was looking at taking a company public via SPAC. And so I chatted with a bunch of SPAC bankers. And in so doing,
call them spankers or something.
Yeah. Like, look, it was a funny thing. Like as I did this, I chatted with a bunch of folks that had done SPACs. And what I learned was the SPAC was actually a vehicle for independent sponsors, right?
Okay. Let's pause here. I want to know like the cliff notes, and I think our audience probably would as well. Cause like you, I mean, everyone's scratching their head around what SPACs are. But also this like going public thing. Okay. So let's start, just to get your perspective on it too. Why does a company go public?
So I guess I can wax philosophical, right? But
in whatever words you want to come out of your mouth.
So
for
some, it's a liquidity event, right? For others, it's a signaling mechanism. I think historically it's become because companies have wanted to tap the broader public market, right? And be able to access more capital, right? So
sure,
historically that was the thing.
Sell equity to the largest market to be able to get cash to grow your company.
There've always been private investors, but historically there's always been far more money in the public markets where, folks like you or I through our, investment accounts all the way through to some of the biggest investors in the world can put money into your stock, right? Yeah. Now, over the last number of years, private markets have grown substantially. And so, the OpenAIs of the world, the Anthropics of the world are still private entities, right? And I think for many of the fastest growing tech companies in the world, that's still a viable path, or in private equity, it's still a viable path. And that's why I never really, in my life of building tech companies, never really went close to the public markets because there was enough access to capital to do the things I was doing in the private markets. I think the thing that we've seen over the last few years has been that there's this big backlog of companies sitting in venture portfolios, sitting in private equity portfolios and elsewhere that simply need to start thinking about getting their liquidity in other ways, right? So how do you as a founder, like people talk about the exit, but really it's about how do you get a liquid currency, right? So for some, it's, you sell, for those who don't know, like a secondary transaction, like if you're raising money, you're taking in some capital, but you can also do a secondary transaction where you sell a bit of your equity.
Your personally owned equity in the
personally owned equity. And that's how you earn a little bit for the work that you've done as a startup founder, right? Or as a company builder. And so there's multiple ways to get that, but with the sheer volume of private companies out there relative to the opportunity in the, for investment in the private markets, there's a mismatch right now where you see a lot of companies that are either owned by private equity firms or invested in by venture that are having trouble accessing their next private round or accessing, more importantly, the private round or private opportunity that they want.
Yeah.
Right. And truly charting their own destiny. And so I built this knowing experiencing the pain that we experienced with Carbon 6 and thinking we were actually going to go to a private equity, thinking that we were going to go for a higher price, thinking we were going to have a certain opportunity set, and then seeing what was there. I knew that there were a lot more companies going through this. And then as I chatted with folks on the other side of the table, the venture fund managers, the private equity funds, found that they were sitting with many companies with which they weren't really sure what to do. So both the founders and the investors were sitting in this position where there was need for more in the public markets. And so my view was that the public markets were going to take on increasing importance over the next few years. And so I said, look, I want to be an independent sponsor. My thought historically was that I would do this privately, but there seems to be this opportunity today point in time opportunity to really establish something in the public markets. So let's go for it.
Okay. So the vision was to have a public vehicle to acquire multiple companies.
Actually, no. It was a public vehicle that would be the first in a series of public vehicles to merge with a single company.
Oh.
And really, it's that the goal here actually is not for me or my team to take control of the company or to own the majority of the company.
Okay.
It's actually just become a minority shareholder. So, my first SPAC, I raised, my team, we raised $172 million, 172.5. And our goal is to find a company that's far bigger than that in its value, merge with that company, bring capital to that company, and then help the company go public.
Okay. So this isn't an entirely new approach. This is something that we saw a lot of activity in during the pandemic, right?
We did.
So let's take a back step and break down what a SPAC is.
Okay. So special purpose acquisition company.
Okay.
So the point of a SPAC is to help a company, basically for somebody like me, who's a sponsor, to go out and establish a vehicle to help a company go public. So now,
and this has been around for a long time in all different markets around the world as a phenomenon.
Been around for a long time.
Okay.
Primarily U.S. focused. It had been a niche vehicle up until the pandemic.
Right.
It had been a niche vehicle, 100 of these a year, for companies that weren't necessarily a perfect fit for the traditional IPO.
Okay.
Like Goldman Sachs, Morgan Stanley is not taking you out for traditional IPO, but you're still a good fit to go public. It could be an international company that has some American operations. It could benefit from a US sponsor helping get the company public. It could be a company that is just one size tier below, but still has great potential. It could be a company that's being spun out, right? Where there's not necessarily like a clear, natural IPO story that's being told, but where there's an opportunity.
But so what you're talking about, if I'm not wrong, is the hype around an IPO isn't necessarily relevant to those cases, right? Like launching on the market, the big splash, we're available at this price, it's going to go up, get it now. That whole aspect of going public isn't necessarily, or am I wrong? And that's always part of the case. Even a SPAC would involve that kind of hype cycle.
I think even a SPAC wants to let the community know and let investors know that, the stock is out there and that it's a great buy and all that stuff. And so, the best SPACs still should do roadshows. Like a lot of SPACs don't. I think they should, frankly, do the same IPO roadshow. But when I think about, a great candidate for an IPO today, it's oftentimes a multi-billion-dollar entity. Because if you look at the incentives of, the bulge bracket iBanks that do this work, if you're not a $3+ billion enterprise company,
it's too expensive for them to invest.
They're not thinking about you. Right. Yeah. But, say you are operating $1 billion, like it's a good business, like $1 billion enterprise value business that's growing 20% per year. For you to get to that point is still many years away. But you could be a venture-backed business where you're now as the founder saying, like, where do I take this? Like, I've got some offers from private equity, but that means giving up control.
Right.
I've got an offer from a strategic, but that would be leaving a lot on the table. I still want to operate my business. What's the best way for me to do this? I believe in myself and my team. I want to retain control and I want to grow and, access liquidity when I think the right moment comes along. How do I do this? This is built for that founder.
Okay. So what I don't understand is how you set up a SPAC.
Think about it as like the IPO process in some ways in reverse. So typically, the IPO is this like celebration. It's a milestone, right?
Mm-hmm.
But it's a celebration after years of work to say, we are ready. We've hit a certain standard. We're ready for public scrutiny. We're ready to show that we are, at the standard to be a publicly traded company. We're passing through this milestone. We're going to continue to build this business and show it, but we're here. A SPAC is kind of saying, look, we're going to do all that IPO work at the beginning of the journey. So my job in setting this thing up was, come up with the capital myself and with my team to set up the vehicle. It's a few $1 million. right? And then put together the right team to make sure our efforts in the SPAC were going to be successful, or at least we optimize our chance to be successful, and then go raise the IPO proceeds before we even begin, right? And so we get money from a number of large funds, none of which you can put in more than 9.9%, right? So we have to raise from a large number of groups to get money into a trust. Once you have that money in trust, you can go you go public. You can then go and chat with companies that you could potentially merge with and take public that way.
Okay, but your vehicle has gone public, yet it's a clean slate, zero transactional volume shell company.
So it's a clean slate company. Basically, it's with capital in trust.
So what are the criteria for listing a clean slate company? I wondered about this because what's the incentive to the market, to the actual market itself, right? The NASDAQ or New York Stock Exchange, what are the exchange itself? What's the value in having these empty companies, pre-companies, be able to be traded?
So the value to the NASDAQ is multifold. I think the most substantial we pay them listing fees, right? So we're still companies on the exchange that pay our fees to the NASDAQ.
How much are NASDAQ listing fees?
Forget. I should really know this.
Is it like $50 a month, or is this like...
No, it's like 80, 90 grand a year. It's a meaningful amount of money.
Still interesting.
Yeah.
Okay.
And so there's we have to pay them fees.
Yeah.
Number one.
Yeah.
Number two, we bring companies into the NASDAQ, right? And so we're out there, in a way, we're actually a partner to NASDAQ because we're hunting to go get good companies to list on that market, right? And fundamentally, NASDAQ's great, but NASDAQ and OIC are both great, right?
Okay,
and so
your perspective is that the exchange shoulders some of the diligence cost on you, in a way. Like for a company to apply to go public, right? If they have 10 years of financials and blah, 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 it's probably a lot more arduous to vet them for the market, right? For a listing compared to a net new company.
There's actually funnily enough that would have been the case a few years ago.
Oh, okay.
Nowadays, a company that's looking to go public still has to be audited and kind of go through many of the same checks under SPAC versus the traditional path.
Oh, okay.
It is a bit faster with a SPAC. It is typically a bit cheaper with a SPAC. But the NASDAQ and others are happy to just have SPACs there. The kind of process to do it is simply you need to be able to have a team that has the capital and is credible enough to be able to make it through the gate to get investor capital in to set up your vehicle.
Okay.
And so
so you put your team together, you put your capital together, and then you put your applications in and you get accepted and then you list. What was the time from conceiving of this to getting to that point for you?
So I was starting to think about it last summer, a little early summer. Decided to do it for sure late in the summer. Let's say July-ish timeframe. And then I took a long time. Theoretically, we could have gotten the whole thing set up in 2-3 months, ran end to end.
Quickly?
If you had your team in place, you knew exactly what your strategy was, you literally just pulled the green light on all the people, all your service providers, probably could have done it in 3 months, right? But I took 7. And the reason that we took longer was we wanted to be very deliberate in getting the right team around us to make sure, and to create what we felt was the beginning of a platform. And so when I look at a lot of SPACs, look, there's some SPACs that have been done incredibly well, but like any platform, it's sometimes been misused, right?
Sure.
And so we wanted to build a really strong team of folks that could make the case to the top private equity firms in the world, top venture funds, that we had a credible team that not only had the credibility on paper, but had the know-how to support that firm and its founders and its business operators to take their companies public in a way that would drive shareholder value, right? And that would have a business that would trade up, that would create a really great outcome for them and their investors.
Okay, so you guys went public in like a month ago or something?
Yeah, like 3 weeks ago.
Congrats.
Thanks, man.
How did it feel? Was it surreal?
A little bit. So as part of my year off, I was taking a couple months in South Africa with the family.
Nice.
My wife will now tell you that I wasn't taking any of that time off, but
you're on some device. The back of the safari vehicle.
Literally, I'm on the way to the airport coming home, and we closed, and so we literally went public. I had the closing call in my Uber ride on the way to the airport. Hopped on a plane. I get on the plane, and then I'm invited to the NASDAQ to come and ring the bell. So message my team and hey guys, 5 days from now we can go to NASDAQ if we want. So everyone's like, yeah, let's do it. And so, a few days later, a couple weeks ago, we went down to New York and, rang the bell and did the thing. And it was a really great experience. It felt a little bit like what you've set up here with the studio.
Right.
It's they're literally, it's not the actual trading floor. At NYSE it is. At NASDAQ it's a market studio that you go into where it's all choreographed.
Mm-hmm.
They've got cameras everywhere. They're filming you and photographing you at every step along the way.
Okay.
And they create this amazing experience where you've got all these pictures of your
so you're in studio, you're ringing the bell, and the confetti comes out, and then the guy sweeps it up, puts it back in, and they do it again half an hour later.
They do it twice a day, opening and closing them. So it's a machine. Yeah. But you feel very special,
of course,
because your team, you're up on, you're in Times Square, your face is on the building, all that stuff.
Yeah.
You feel very special, but you also at all times are very aware that these guys are delivering a very high quality product through that machine.
Right. Interesting.
Yeah.
It's very interesting. That's a whole series of podcasts in itself, looking at the global public markets, who owns them, and how they're run as businesses, right? That would be a fascinating expose. I don't think many people have kind of dug into that story. Anyway, we're talking about you today. Very exciting. So now you're on the hunt for a company to help take to the public market.
Exactly right.
And then you said that this is something that sounds like it's going to be a repeat process. You want to do this multiple times.
I do.
Tell me a little bit about this. Of course, here at home, there's the example everyone else says of ETFs or ETF type things. There's the Constellation Software type of company, publicly listed company that acquires software companies to amalgam.
Hmm.
And then you got ETFs, which is this combined investment vehicle that is made up of multiple investments in multiple different businesses that are publicly traded.
Mm-hmm.
Why wouldn't you, or can you, do what you're doing with a single vehicle that's publicly listed, buying multiple companies? Is it just about the dollar size of what you're buying?
So you totally could. For example, if we wanted to do Carbon 6 2.0,
yeah, and
go find a company to acquire and then tack on a bunch of acquisitions to that company,
right?
We could totally do that leveraging a SPAC, right? So the idea is we've got a shell company. We can go acquire some asset and then use that to be very acquisitive. That is a viable strategy. And for an operator, if you wanted to have a SPAC to go find a business to operate, you could do that too. What we want to do here is become a minority partner to somebody and do that really well.
Okay.
Because I think if we can do that really well, we can do that on repeat and basically do one of these, every year and make that our business. And I think it's really fun. I'm going down rabbit holes on different industries and different businesses and learning all these new things and meeting new people, going to conferences and kind of, having Zoom sessions with folks that I've never met before. And for me, there's a thrill in all of that stuff. That's the part of building the business that gets me going. And so it's been cool.
It's interesting because there aren't many businesses that can allow you to have that freedom of inquisitiveness. When I worked at IBM, that was my job. Before IBM, I came in IBM through an acquisition. So I was at SoftLayer, and we were running the community team, which was basically startup ecosystem support. And it was just carte blanche to kind of like see how people are building companies and supporting and investing in those companies, and be there along with them with infrastructure and a helping hand. And it was awesome for that.
Yeah.
But it was also kind of like soul crushing because it was very tied to this, like, you know, that the mechanics of the VC world, which is interesting to a point. And that's where I think, you know, what can you say about VC sitting where you are now today with this kind of exciting proposition of being able to, what did you say you wanted to be? I think you said it a few times, a sole champion or something.
Independent sponsor.
What is that, a formulaic title? Is that
so an independent sponsor, like you might have had a friend that did a search fund before. So a search fund is basically where you go out and you say, look, I want to be entrepreneurial, but I'm not going to start a business. I'm going to go find a business to buy, right? And then I'm going to go operate the business.
Okay.
An independent sponsor is where you say, I'm going to go find a business to either buy or lead an investment round in, but I don't have a fund. I'm a fundless sponsor, right? So I'm just going to do this because that's what I'm interested in. So I'm intellectually curious about these areas in the world. I'm going to go find businesses and I'm going to buy them or invest in them. So that's what we're doing. We're starting with the minority, basically as minority investors that are helping companies go public. And that's what the SPAC is all about. And so I'm solely focused on that for now,
right?
With the view that can become the bedrock of obviously something that bigger that we do, but where this was always going to be a core part.
What's the timeline on that you guys are working with?
24 months. So when we go public as a SPAC.
You have 2 years?
I have 2 years.
That feels like a long time.
In theory.
Yeah.
But once we get a company under LOI, like it could be 5-6 months before we close the
right,
deal.
because diligence and everything else could take a while.
So let's say that we just went public. We spend our first 5-6 months finding a company to go merge with. Then we decide to do it. It would be by the end of our first year that we're getting that deal done. Let's say, for some terrible reason that deal were to fall apart, we now have year 2 to rebuild.
Right.
And we basically have a second kick at the can. Right. But that's really all you've got. And so it behooves you as a SPAC team, like, to move as fast as humanly possible. So, my team and I were hitting conferences. We were literally like reaching out to everybody in our networks, like investment bankers, fund managers, chatting about the assets that they've got that fit our criteria. The companies that we're chatting with founders in our networks about, what they want to do with their businesses, because, we need to move.
Man, it's interesting. And I'm excited to actually have multiple touch points in the next 2 years with you, hopefully on camera, because I'm sure you're going to find that there's way too many opportunities to help. And I think this idea of it's a tricky thing though, but like this idea of, like, let's say someone's venture backed, but they hit some good numbers, however, not good enough to satisfy that kind of, like, I don't know, Series D investor. And do they even exist today? Like Andreessen Horowitz just ate the whole pie. And do they double down in a way that, works as if you're going to 5 different shops in your journey to raise capital along the pyramid, or whatever you want to call it?
This is a real problem. So, like, if you are like the number 1 company in a venture portfolio, right, and you're flying and you're tripling or quadrupling in size every year, like, cool, there's always going to be a great opportunity for you. If you're like a couple $100 million ARR software business, you're like, you're a little bit profitable, you're growing 20% per year, you're close to rule of 40, you maybe need to optimize a bit to be there, right? You're kind of stuck right now. Like, there's been a re-rate of the category, multiples have come way down. And so you used to think that you had a chance to be public in a couple of years. Or at least that there was this there was this large group of funds out there that would potentially underwrite your deal.
Right.
Now you're saying, okay, well, the timeline to go public is way longer. And all the growth equity investors that would have been chomping at the bit to do your deal a couple of years ago have disappeared, and they're all chasing AI and, other types of opportunities. Right. And so you're still building a great business. You've still got super happy customers that continue to renew and pay more, but your business just isn't in favor today. Right. That's a really interesting business for us to talk to, right? Or, you're an industrials business and you sold to private equity once, and now you've reached scale. You're a couple $100 million EBITDA company. You've got scale, right? but there's not a logical strategic buyer for your company. And so the private equity firm, when it's looking to exit, is saying, well, we're gonna have to sell it to some other financial buyer who's gonna, put a lower multiple on it because there's no strategic options out there. They're literally buying it for its cash flows. Those types of opportunities are super interesting for the public markets too, because if there's some premium that the public will apply to it, maybe it's a consumer story, right? Maybe it's something else that's relevant in the economy. There, you can actually get more in the public markets. Then it's all about how you structure it. So that's kind of what we're looking for, and there are tons of opportunities out there.
It's really interesting because I wonder, I mean, I don't understand this, so maybe any color you can shed on it would be helpful. But I know here at home, there's been, on the Toronto Stock Exchange, they launched the Venture Exchange, right? Which was supposed to be an on-ramp for smaller companies, newer companies to be able to be public companies.
Yeah.
So what's the difference between that profile that you just mentioned and your typical $1 billion to $3 billion, like you said, classic IPO? Why aren't the 200, 300 million ARR companies going public? Is it because the banks won't shop them?
Because the top tier banks won't shop them. So like Goldman Sachs will never pick up the phone, or like they'll pick up the phone, right? But they're never going to take, a sub $3 or sub $2.5 billion company public, right? They're looking for bigger companies, right? To take bigger fees off of. And so you're looking one tier down with the banks, right? And so it becomes the domain of independent sponsors to go and meet those companies and say, look, where do I see a compelling growth story?
But there's no middle ground. There's no like boutique banks that do listings and represent high net worth individuals?
There are.
Okay.
There are. And some of them play in the SPAC business.
Okay.
Right. Others, talk to their clients about other options like reverse mergers and so forth. Personally, I think that if you're not being taken out by, a top tier bank, a SPAC becomes a really, really interesting opportunity for you, which is kind of why I went there. In Canada, it's a little bit different. So you asked about the TSXV and the TSX. The TSXV, you can actually be a lot smaller. There can be some those businesses are a lot smaller than the size range I'm talking about.
Like $1 million a year sort of thing?
Not quite that low typically. Okay. I'm sure you could, but much smaller than $1 billion enterprise value. There are plenty of companies out there that are in that a couple $100 million enterprise value range.
Yeah.
And lower, right? But the challenge we have here in Canada is limited liquidity. Right. And so if you're an international company or you're a company that has a large US presence, the ability to tap American investors in a meaningful way through a NASDAQ listing is helpful. And that's why we went with a NASDAQ vehicle.
As opposed to being local.
Opposed to local, right? We can always cross list in the TSX if it's a Canadian company, right? But we're kind of looking internationally, and we know that, a company of that size is thinking US markets or its own jurisdiction or both.
Interesting. And so even in terms of the company that you're looking to buy, it's primarily going to be US based.
It's going to be companies that have a US presence or some reason to list in the US.
I shouldn't say buy. Is that the right nomenclature?
I guess we technically buy, but I think of it as a reverse merger because although we acquire, my team and I and my investors become minority shareholders on day one. So it's still the owners of the company that we're merging with that end up being the control of the business. And, I drop back to becoming a board member and just a supporter of the business and help however I can, but I'm not the driver of the business after the merger.
So as you talk to these companies, short of their head scratching to do with like next round finance versus shedding their cap table and having these like zombie investors on their cap table, I guess the question I have is like, how apprehensive are they? Now you just started talking to people, but how apprehensive are they about being public in today's geopolitical, economic milieu?
It's a funny time, isn't it? I think it depends on who you talk to. The funny thing is the answer that I'm learning over and over again is it depends. I think that, when it comes to SPACs and what we're doing, there's a natural reticence amongst some, but increasingly, and really, I've even seen the shift over the last 6 months.
Yeah.
There are more and more investors are saying like, it just makes sense, right? The question becomes like, when, and like, and so for a private equity investor, for example, it's like, which of my companies, or a venture investor, which of my companies make sense, right? I think the challenge is like with public markets, you need to be able to withstand some variability, right? But if you're taking a long-term time horizon, let's say you're an operator of a business and an owner of a business, right? Founder, and you plan to operate for a very long time. So you don't have a specific timeline saying, you need to, you want to sell your entire position, exit your whole business within X years, right? Or within like X months, that is.
And
right?
your cash position's good, so you can just ride it out. Yeah.
Right. So you've got a good cash flowing business that you want to continue to operate for the next few years, right? Or potentially beyond. Then it's about, then public markets are very viable to you. And it's just about, what's your option set, right? And what you might find in the public markets is that you're willing to get an extra turn or two on valuation, especially if your business is something that's relatable to people, like to the average person.
Yeah.
Right. And you can still get some upfront liquidity, right? Look, you have to roll the majority, right? But there's still there's a bit of upfront liquidity that you can get the same way you would doing a growth equity deal. And then, your job becomes go build value in the public markets, which, you're gonna have to learn to speak a different language to the public markets investors than you would to private markets investors. But fundamentally, you're still just operating your business, right? And you're still controlling your business and driving your business. And the nice thing you have at the end is, yeah, sure, there's going to be times when the market's volatile and the volatility works against you and your stock is trading low. But there are also times where that volatility is in your favor.
Absolutely.
Right?
Yeah,
and
of
you're flying high.
Yeah.
And, if you have the ability to just sell or exit bits of your position when you want to, having a public float is an amazing thing.
Of course.
Right?
Yeah.
And so, there's everything's a double-edged sword in life, but there's a really interesting opportunity here for a lot of founders.
It's interesting because like I've talked to a bunch of people that have, just like private investors, high net worth people in the last, let's call it over the last 6 years, right? With the pandemic and then the ebbs and flows since then, now this World War III business, and asking people, how are you viewing your money? Is it safe? What's your threshold for pain? When do you pull out? Most people that I've talked to, in fact, everyone that I've talked to that has $1 million plus in stocks and bonds is like, oh man, my portfolio's down. And I'm like, okay, so what's the deal? And they're like, well, you know what? It went up and down in the pandemic and that was pretty bad. So, I don't care. Or they're like, I don't manage it. My guy hasn't emailed me, so I'm okay. And, to me, being an operator who's like all in on my business, I'm like, wow, that's crazy. If something went down, if I lost 40% of my business overnight and I couldn't get it back for the foreseeable future, I'd be thinking about changing what I'm selling.
Yeah.
So
it's funny, like going through the SPAC process, if I was on the other side of the IPO with markets doing what they've been doing, look, I think it went up yesterday, right? But like, with markets doing what they've been doing the past few weeks with this war, I would have been feeling less great, right? I think we timed it reasonably well to be out a few weeks ago versus now. But now that I'm on the other side with a vehicle in market, the volatility for me and the decline in, in prices is not necessarily a bad thing.
No.
It means that if you're sitting with a public currency and you ultimately merge with a great business, if that business is valued a couple turns lower today, and there's more upside for your investors, right?
Well, I think this is the thing is that, and have you seen it in the last few years as you've been like looking at other SPACs that are out there, right? And then this like post-acquisition story of companies for the good ones. You said there's good ones, there's bad ones. On the good ones, if they bought well and they brought great revenue stories to market that are a little bit, cockroach company type model, I would think that those become the sort of thing that get more easily put into people's portfolios as the like de-risked investments in a volatile market. So
100%.
It's great. It's a good thing to do. Interesting.
Yeah.
Very interesting turn of events the last few years, my friend. So if there are entrepreneurs that watch this and listen to this and are salivating at the opportunity to have a helping hand in divining a future for their company because they fit your investment criteria. Like, are those? Do you think those people are in the audience? Are they rare? Are they looking for options?
I think they're rare just statistically, in the sense that most entrepreneurs don't continue to operate their business until the business is worth $1 billion or whatever it might be, right? Most, like me, I've never been part of a business that's exited for over $1 billion, frankly, right? Like some members of my team have, right? But like I've never, done that. We exited what we thought was a really nice number. So I've never been part of that. But I know that, once, for those who are, like, I've chatted with the decision set, and frankly, we have a number of folks on the team that, represent the decision set.
Right.
And, it's a pretty, compelling kind of, thing to think about. Right. The folks in the audience that I'd probably want to appeal to wouldn't necessarily just be the founders. Obviously, if you're a founder of
it's their wives,
business,
their husbands.
Husbands,
It's
wives, their children, come talk to me. No, it's look, with a business like ours, it's a little bit different than venture or, angel investing, where there are a large number of targets in that world, right? And what you're trying to do is sift through. And look, there's still an element of sifting for us, but there will be a couple thousand companies out there that could make sense for us. And so, it's our job to know every single one of those companies in Canada and all the companies in the US and internationally that make sense for us, right? And get in front of as many of them as possible. For those folks that are operating those businesses, yes, please come talk to me, right? The folks that I'd want to appeal to would be like, if you're a venture investor, right? If you're a private equity investor, if you're a venture investor, you've probably invested in a couple of these, right? If you're a private equity investor, you might actually own a company that's like this. If you're an investment banker, you might see a couple of deals like this. It's about putting in the minds of anybody in the ecosystem,
right,
that this option exists, and this can be a very good option, especially in today's market where you see this liquidity mismatch. And especially when you've got the right team of people. Like, my partner is a hedge fund manager. He's a public markets investor, 25 years in the public markets, deeply understands how to vet companies for the public markets, knows what the end buyers want. And so thinking through that strategy is really important. My board directors, we've got a couple of guys that have executed successful SPACs before, and then multiple fund managers, right? From, private equity leaders, from, SoftBank, or from teachers, from and, Windjammer Capital and PSG to SoftBank partner. We've got folks on the team that have operated in the capital markets at the right level, so that we can kind of look across the options, right? From and assess what the right move for the company is, and kind of be that consultant. So those are the people I'd be trying to appeal to. We're going pretty broad at this point.
And to just personify your fund again, or your company, your SPAC, why was it named what it is?
Suma.
Yeah.
So my younger daughter is Suri. My older daughter is Maya. Suma.
So this is very personal to name it after your children. And of course, you are a big part of the fund, right? You've put your own capital into it.
Own capital's in there.
So what percentage of that is yours?
Well, a large chunk of the risk capital in setting up the SPAC is mine.
Okay.
Of the $172.5 million, that's all institutional capital.
Okay.
So the way that works is it's basically a bunch of big funds. Like we've got numerous pension plans in there, numerous top hedge funds in there. They give us their money in trust. And so they have a lot of money that's sitting there on the sidelines, in T-bills, right, earning interest. And what they'd like to do is put that money into something that could give them a potentially higher return. So they put it into our trust account. We now invest it in T-bills. And when it comes time for us to find a company, we have the opportunity to get that money by showing them a good deal. And so then it rolls into our business if, we make the right case.
And then a quick story on how you assembled your team.
So I met like a friend and partner of mine, so my investment banker on this, through this journey. And he introduced me to one of his best friends, Dave, who was a hedge fund manager. And the two of us chatted about this opportunity. We're very like-minded,
Okay.
but also people that come at things from very different perspectives. So I'm the like super optimistic BD operator guy who's out there trying to create business at all times. Dave is like I've been in the public markets for 25 years. I've seen everything.
Yeah.
And like, I'm going to ask you a bunch of really smart questions to find out where you're lying. Right. And I think putting those two skill sets together is powerful, because he knows like his skill is finding out where the bodies are buried, so to speak, but also really vetting for where the opportunity lies. And so he can find these hidden gems, and we can assess a portfolio, and I'll bring a lot in the top. He'll sift through to figure out what works. But if something I bring through the top is sifted through and we find that gem, the two of us have the right combined skill set to go market.
Yeah.
And so then the two of us went out together with our other partner, John, and said, look, how do we build the team? And we pulled in the best people from our networks that made sense for this opportunity. Right.
And everyone's motivations, assuming everyone has other gigs.
We are heads down on this thing.
100% in. Everyone is an employee of this.
Like, not employee in the sense that nobody draws a salary.
Okay.
But we work as if we're 100% in. We're entrepreneurs. We have another guy on the team who's full throttle, like a Harvard Business School guy who's a few years behind me, who's full time on the team as well.
Okay.
And then we have a few board directors that are all part time on the team, but their role is to connect us with people who can create opportunity, right? Investment bankers, fund managers, all that kind of stuff, directly to companies. So we have a lot of touch points that are driving pipeline.
Nice. As a Canadian with a company on the NASDAQ that's going to buy another company on the NASDAQ or bring one to the NASDAQ in America, what is your optimistic operator perspective on the future for North America in the next decade, let's say?
Like, I want to be optimistic. I think we're in this weird time. And so much is leadership driven, right? Where, it doesn't feel like we're as collaborative, and obviously like, the political atmosphere doesn't necessarily feel collaborative all times, but, our countries, Canada and America, are so embedded, so enmeshed. And as Canadians, we're so enmeshed with America that we're gonna continue to do business the way we always have. Of course, at the margins, we're gonna diversify, and it's great. Like Carney and team are trying to diversify, and like that's how we should be thinking about the world as Canadians. But we also need to acknowledge that, the old adage from Trudeau, which is that we're the mouse sleeping next to the elephant. We need to work with the elephant. And so my career, like Carbon 6, we did 90% of our business in America, right?
Right.
Even though we were primarily based here in Canada. Previous businesses of mine, it was the same. And so I think that there's a great opportunity as Canadians to kind of work with the American capital markets, but also create that access for Canadians, because there are lots of great Canadian startups that probably, and Canadian, businesses in general, that should be thinking about tapping the US markets, right? Appealing to American investors. And also appealing to Canadian investors. Like, I have a huge number of Canadian investors, both individual and institutional, in our vehicle. And so there's no reason that you can't access a larger liquidity pool while continue to run your company here in Canada.
Yeah, it's so true. Nice.
Yeah.
Well, thanks, man. It was awesome spending some time catching up with you and hearing this full cycle of launching a SPAC and now going out to like look for a company to take to the market.
Thanks,
it's
man.
quite the adventure you're on.
It's going to be fun.
Yeah.
Thanks for having me.
It's a pleasure.